All right, let's pull back the curtain on what might be the biggest illusion in the modern world: money. Seriously, what if I told you that our entire global financial system, it's all built on a simple, really old trick? A trick that means most of the money you think you have, well, it doesn't actually exist. Yeah, I know. It sounds like something straight out of a movie, right? But this isn't some metaphor, and it's definitely not a conspiracy theory. This is just a fundamental, kind of mind-blowing fact about modern banking. Think about it. If every single person tried to pull their cash out of the bank tomorrow, the whole system would just break. The money simply isn't there. So, where is it then, and how in the world does this system really work? Well, that's exactly what we're going to unravel. We're going to look at how this all got started, how it works today, and what it means for every single dollar you think you own. And trust me, the answer is probably not what you're expecting. Okay, so to get our heads around today's digital economy, we've got to jump in a time machine. We're going way, way back to a world of clinking gold coins and dusty old vaults. Because believe it or not, the secret to modern banking, it all starts with the very first bankers, the Goldsmiths. It all started out pretty simple, right? You've got all this heavy gold, you don't want to lug it around, so you'd store it with a local goldsmith for safekeeping. And in return, you get a paper receipt. But then something interesting happened. People figured out it was way easier to just trade the paper receipts instead of dealing with the actual gold. So the paper itself kind of became the money. And this is where the goldsmiths had their light bulb moment. They looked in their vaults and realized, hey, most of this gold just sits here. Nobody's coming for it. So they started writing extra receipts. They were lending out promises for gold they didn't actually have. And get this, they charged interest on them. And just like that, poof, money was created from absolutely nothing. And that was the big turning point. The second that a paper promise became just as good as gold, the whole idea of money was unshackled. It wasn't tied to physical reality anymore. It wasn't about digging metal out of the ground. Suddenly, it was all about confidence, about debt, and yeah, maybe a little bit of clever trickery. This was the birth of the system we now call fractional reserve banking. Okay, now let's hit the fast forward button, because that simple little trick, it didn't stay in some dusty medieval workshop. Oh no. It got scaled up, it got institutionalized, and it eventually became the operating system for the entire global economy. So, over hundreds of years, this thing just evolved. You had the Bank of England pop up in 1694, pretty much for the specific purpose of lending the government money it didn't actually have, with the promise of being paid back by future taxes. Now, of course, the system led to bank runs and panics. It was inevitable. But did governments stop it? Nope. They doubled down. They created central banks to be the lender of last resort, basically putting an official stamp on the illusion to make sure we all kept believing in it.
For a long time, there was at least some kind of tether to reality. It was called a reserve requirement. The idea was if you deposited $100, the bank had to keep, say, $10 in the vault. They could then lend out the other 90. That 90 would get deposited somewhere else, and the process would repeat, multiplying the original money over and over. But here's the thing. That story, it's completely out of date now.
Just look at that number. Since March 2020, the reserve requirement for banks in the US has been exactly zero. 0%. That is not a typo. A bank is legally required to hold none of your deposits in reserve. The fraction in fractional reserve banking is now zero. It's just reserve banking. So the obvious question here is, right, if that old leash is completely gone, what's to stop a bank from just creating infinite money, from just lending out a crazy limitless amount? Well, there is something stopping them, but the answer is a bit more complicated and, frankly, a lot less understood by most people. The answer is something called the Basel Rules. It's this whole complex global framework. And here's the key. The new system isn't about your deposits anymore. It's about the bank's own money. It's capital. The best way to think about it is like a safety cushion. The riskier a loan is, the bigger the cushion of its own money the bank has to have on hand to absorb any potential losses. So you see, the system isn't really designed to protect your money anymore. It's designed to protect the banks themselves from going bust. So this is the most important part, the bit we almost all get backward. We think banks are like middlemen, right? They take our deposits and lend them out to other people. That is not how it works. In reality, banks create loans first, literally out of thin air. When you get a mortgage for a house, the bank doesn't check its vault. It just types the numbers into your account. And poof, new money exists. The loan creates the deposit. All new money is born as debt. So here we are. A medieval goldsmith's trick has become a global digital system. And you might be thinking, okay, this is all very abstract, but why does it matter to me? Well, it matters because this system has three direct, completely unavoidable consequences that shape your financial life every single day. Okay, number one, inflation. It's basically baked into the system. When new money is constantly being loaned into existence, the total supply of money just keeps growing. And what does that mean? It means the value, the purchasing power of the money you've saved goes down over time. Second, perpetual debt. Think about this. If every dollar is loaned into existence with interest attached, then there is always more debt out there than there is money to repay it. It's a mathematical certainty. The only way to keep the whole thing from collapsing is to create, you guessed it, even more debt. And third, this system concentrates power and wealth. It just naturally benefits the people who create the money, the banks, and those who are able to borrow that new money to buy real assets before prices go up. I really want you to let this one sink in. Our entire modern economy depends on debt constantly expanding. If tomorrow everyone, and I mean everyone, became super responsible and paid off all their loans, the money supply would collapse. The vast majority of the money in circulation would just disappear. The economy would grind to a dead stop. Your debt, my debt, it's literally the fuel that keeps the machine running. All right, I know, that all sounds incredibly heavy, so what are you supposed to do with this information? Well, the key here isn't to panic. It's not about that. It's about taking a step back and fundamentally rethinking your relationship with money and what wealth actually is. And that brings us to a really critical distinction we have to make. On one side, you've got what we can call screen wealth. You know, the digits you see on your banking app. They're just promises, really. They're just entries in a giant digital ledger. But then, on the other side, you have real wealth. This is the tangible stuff. Your skills, a piece of land, a house, resources, things that have real inherent value no matter what's happening in the financial system. So look, the takeaway here isn't to be paranoid. This isn't about some doomsday scenario or telling you to stuff cash under your mattress. Not at all. The real lesson is just awareness. It's about finally understanding the rules of the game we're all playing. Because once you know the rules, you can start making smarter decisions to protect yourself and to build genuine, lasting wealth. So I'm going to leave you with this one final thought to chew on. In a world where all our money is literally created from debt, in a system that requires more and more debt just to keep functioning, what does it really mean to be financially free? It's a pretty big question, and it's definitely one worth thinking about.